So we're going to go for OrdCAD as a asset to trade. Again, I've put later years. So something a little bit more recent, but not recent enough. I haven't really had OrdCAD in my portfolio anyway, so I'm not going to suffer that kind of bias. If you look where we're coming to, you've got key resistance up here, so I'd be happy to start the short process. Furthermore, a little bit higher, a few hundred pips, you've got more key short areas. Stochastic oscillator well up. So we're definitely looking short side for this. We don't want to go insanely crazy just because of the force of this move. So I'll start it off with a 0.4 and we'll see where we get with that. So out for gains there. Now this is a tiny dip. I don't really even need to take a long, but I will take something rather small and I will add another rather small one again. And on a pop back to those highs, I will look to exit if we get it. We didn't get it, and we're still coming down off from that peak of about, nearer parity. So as we fall, I'm going to add another one. I'm just really spreading out these light entries. And now really on a substantial push to the upside, I'll take some of these off just to collect a little bit. And then what I'm going to do is I'm going to immediately look at the process of hedging out those former longs. So if we do continue this trend, which is now becoming quite steep to the downside, I'm covering myself on that exposure. You can see that right there. So if I take that out for gains, I don't necessarily need to take these off. But what I am thinking is because we're so high up already, I would rather remove that with the 65 bucks I made. But I'm not going to do that in this instance. I'm just going to add a little bit more. In fact, I changed my mind. I am going to do that. I'm going to take off the top one. So slight net loss on that. But if we pop now, I'll get it back probably. If we don't, I can add again. So I've now got a decent lot in play. And I'll just close that. And what I'm actually going to do is just early remove that in case we start to trend down. Because it looks likely. The reason why I say that, in case anyone's wondering, and I'll just add a bit more there, is because if I go on the monthly, that's how far we are up. Yes, we are at key support, but we're an awfully long way up. So I don't really want to be vulnerable to any longs. So I can take that. And if I start to scale and long again, it's going to be light. And what you can see I've done there is, yes, I've expended, on those longs I formally took off, but I've covered it with hedge gains, essentially. And that's really the crux of this method. You're never really losing money because you're always hedging yourself out to some extent. And in a mixed asset portfolio, you can cross asset hedge essentially, which is where you're taking various positions across various assets. And essentially you end up hedging yourself, even though you're not trading the same thing. So I'm going to leave a 0.05 on there, I think, actually, and take that off. And you can see the gains are just accumulating pretty quickly. Again, as always, I'm doing these very, very light size, just so I can show everyone a risk-averse scenario. I don't want people to come on here and see thousands of dollars flying up and down and sideways, because it scares people. They don't really know. They don't really like to see that, particularly, unless they've got a lot of capital themselves. And most people, to be honest, just don't. Okay, so I'm going to take a 0.15 because I've just put 3 of those 0.5s out. And on a larger drop, we can look to take something off if we can get it. Okay, so I'll take that one away, as well as that one. So very light gains. Take that one. Price somewhat supported, so I'm just going to take another long. And on a further extension down, I'll look to take a further long again. So I am going to buy, because we're a little bit off the top now, I'm going to buy 2 more, a bit more aggressive. And anything much, much further, then I will add again. But I'm not keen at the moment just yet. So I'm going to let it have a chance to rally. And we're still not seeing the pop yet, because you're basically getting no movement. And if we drop further, like I said, I'm going to look to the long side. Now, if we pop a little bit more, I'm going to look to hedge short. Okay, because it looks like price is getting fairly weak. Okay, so perfect hedge there. Took that off again. Just going to have a look got a lot of key support here. You've only got 3 longs there, very low drawdown. So if we can push a bit further down, I'm going to add again. Okay, I'm going to put 0.15 in. And now we can see where we end up. So I think that's a decent long zone. I'm just going to take that off. I'm going to pop a hedge in here. And if we push higher, I'm going to reduce some of that long exposure with the gains I've taken throughout this. Okay. If we come a lot deeper into that price action, I think what I'll do is I'll actually take that one off. I'll just add again. Okay, nice gains there. I'll add another short hedge just to protect myself a bit. And I think actually because the market's subdued, I'm going to take that one off. Okay, I don't want to add anything short. And I can just look at these longs. This is a good real demo what I'm showing you here, because you've seen that steep fall from parity pretty much almost 900 pips down, and really we've got basically no drawdown. Yes, again, like I say many times, yeah, the gains aren't, you're not going to make you a millionaire, but that's because I've kept the risk so low. You know, we've got absolutely minuscule drawdown, so you could have scaled essentially, and many people will. But like I said, we're just displaying the skill here. It doesn't really matter what the dollar amount is. It's about whether you can keep drawdown low relative to the sizes and the risk you're willing to take. Okay. And it also helps as well, because if I come on here with a back test and slam enormous sizes in, you know, obviously that's not real cash. So it means you can not think about it. So there's no point in doing that either, really, I think, because in real life, you know, unless you're very, very well trained, it's going to affect your decisions for sure. So that's why we're quite used to it now, because we've done it for so long. But for a lot of people, they won't have. So coming in here, I'm going to add another long. And again, like I said, this is just a short show of, 1,000 pips or so. Again, still no drawdown. We're still in positive equity as well. So I'm free to just add more longs as I please, pretty much. And now I'm going to add a short hedge here. 0.07, I think, slightly heavier. On a dip, I can kill it off. If we get a dip, if we rally, I'll take that one away. Don't add anything short. But at this point, what I can do is I can remove that long. Again, with some of the gains taken. And you can see I'm wearing away at that exposure we had before. Can add something light again, short. And we should hopefully be able to just remove some of these. So I take 22 bucks there. I'm going to add another light long. Okay, now if we push lower, I'll kill that short. In fact, what I'll do is, because we're coming to a long zone, I'll just kill it now. It's not a major long zone by any means, but it's a long zone nonetheless. And you can see the market, like I said, the market is coming down, 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 down. And we're still in profit because we're removing the longs that we looked at formerly. And what that does is it allows us to put larger sizes at better prices, where you get big pushes like that, that can completely wipe out this. All right. So if I wanted to, again, like I said, if I wanted to, I could now remove that long side exposure, and this would be a short, very quick hedge cycle, basically. So if I move that one off, okay, I've actually got another one underneath, it seems. So we'll keep going slightly longer. But like I said, the point really is I'm just trying to get everyone to grips with, the fact that it doesn't matter really if you're wrong. Take that out because we're in with this newfound downtrend, which we've been tracking. So, okay, so that's fine. I'll take a long hedge just in case, because now what we're probably going to have to do is hedge out of these former entries. Now, at this point, the price is fairly median. It's fairly in the middle, or it was, until I took those gains. So on a dip back now, I could consider removing the shorts completely. What I am going to do at this point is just add 2 more 0.05s. And if this dips well, I can remove that one for $51, that one for $51, and that one for $51. Okay, here. And I've just removed that one for $100. I can now add this, and now we can look at trading the long side. So I'll kill that off. And if this does uptrend, which it looks like it might, because it's quite, it's a newfound uptrend at the moment. Okay, it's not, no problem, but it may still bounce, so we won't jump too early. Probably could have taken a short hedge and exit a couple of those there as well. Just going to add 3 longs. I'm just looking for the optimum price to basically end all these trades pretty much. So it's at 26, 26, and 26 is 78. I can remove that top long there. Okay, and I can see what I can get from this. Okay, so nothing at the moment. $18, I'll take a long. And again, on a pop-up, it'd be ideal, but we never get it just when it's absolutely needed. Or do we? Could have got it there, could have got it again. So at this point, I'm not desperate at all. I'm just trying to pretty much work out of these entries completely so we can just end the video and you can basically get a feel for the end of the whole cycle. But again, we're now way far off, this point to the downside. We've been wrong on our longs. But again, it just doesn't matter. We cannot lose money, really, because we're just being sensible with when we remove trades out and our sizes. And as long as you can control that, you really just shouldn't have a problem. But you have to control it. Like I said, you can't just be going crazy with entries and random sizes all over the place thinking you know what you're doing, because it gets very hard to deal with that. You just want a nice profit trajectory like this. Okay, so again, low risk, low sizes, but it doesn't matter where markets go whatsoever. It becomes very, very much it can be passive. You can take entries here and there. You don't have to work at it all day, and really, no matter what happens, that asset will pay you. The maximum drip in drawdown at any time was $500. So yes, we only netted this, but you could have had a much, 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 much higher size and made that OrdCAD only pay you a lot, as well as having a high win rate. Of course, you could have had a mixed portfolio, various assets, and therefore the gains would go up and up. So a low risk example, but again, it can be scaled. Thanks for watching. See you in the next one.